What's good? What's good? What's good?
What's
Welcome to
good?
another episode of Over the Counter Podcast.
Back with
Oh
another.
man, it's another one, and it's been one of them weeks, man. It's been one of those weeks.
It's
A
been
lot went on.
a lot of red, whole lot of red.
Whole lot of red. Whole lot of red. But it's always good when you can kind of like not necessarily see those things coming, but account for those things coming. So it really don't shock you when it happens.
Yeah, I mean, we didn't get caught off guard. I mean, we really we this is a moment we really been waiting for. So
Boy, I've been looking forward to it. Red days are a good day for me. I like to go shopping. That's where I showcase my shopping addiction, you know what I'm saying, on red days. So, man, with that being said, let's get into it, man. We had a lot going on this week. We've had executive orders. We've had a whole deep seek three situation happen. And the market definitely felt it. So yeah, I mean, in terms of executive orders, it's more than one area that has gotten executive orders, but I think all the markets, maybe outside of housing right now, is feeling good, feeling great. So Donald Trump has talked about a lot of executive orders, one specifically around energy, the energy sector, which I thought was surprising. I mean, I knew under Trump's administration, energy would be an area of focus, but I didn't think it was going to be like right out the gate. So that's what surprised me. So to see him jump off the porch with energy executive orders, I was fairly surprised.
well, I mean, if we look at the timeline, what he's doing now is something that he did back in 2017. Literally same thing, jobs, fairness, protecting the industry. He did this back in June of 2017. Back in 2019, he let his intentions be known with the Paris Agreement. 2020, of course, out the way the year. We withdrew in 2020, and then Biden entered us back into the Paris Agreement in 2021. But Trump he's had the same stance on energy, in regards to the Paris Agreement and all of that kind of stuff since his first presidency.
Yeah, I mean, and he's definitely within that same light with withdrawing from the Paris agreements. He's really buying into, or I guess doubling down on this whole America First thing, because apparently we spending billions of dollars to even be a part of this group, on top of having harsher restrictions on how we are regulated in the energy sector amongst other countries. So I definitely see what Trump is talking about, at least in that regard. So I'm all for that, especially if we can save a dollar. We ain't got to just go crazy, because I definitely foresee, lessening regulation in the United States around energy and, new venture projects related to energy. It's very hard to get a project going and get a project cleared, like with permits and all that stuff. So being able to lessen those restrictions and that regulation around, that type of stuff, I think we're going to see an explosion of growth in the energy sector. Um, you know, and they're talking about specifically focusing around Alaska. So I foresee any energy company that's not already exposed to Alaska, they're gonna be trying to rush to get exposure there. I didn't even know Alaska had a lot of oil reserves. So,
I
and it's
I,
cold as hell up there.
I ain't know nothing about no Alaska having no reserve. But I mean, he said many times, man, that we are one of the richest countries in the world when it comes to oil, and he believes that we should be focusing on our own dependence. And I agree that we don't need Paris Agreement or any other outside forces to be telling us how in controlling and how we have how much emissions that we do use or anything like that, especially if they're not fair with the regulation or they have more stricter guidelines on us. I
Right.
mean, we
Yeah, I mean, but like I said, I don't foresee us just going crazy. Like, there's definitely guidelines we're gonna have to follow. Maybe not as strenuous, but it's not gonna be where you can just dump and drill any and everywhere. Like, they already are very strict on where you can have oil facilities and drilling sites and stuff like that. So I don't foresee that really changing too much, because it's not just it is about, saving the environment to some degree. It's like working with the environment, and just having like responsible drilling practices and stuff like that. So even though we'll see an explosion in growth, I still foresee there being like solid regulation around the sector, just so we can stay in line. Because if we're being honest with you, if people can skirt around regulations just to save a dollar, and we don't have like strong fines in place to prevent people from not doing things by the book, then yeah, companies will definitely do that. But another part of this that I thought was interesting was the national energy emergency that he also declared. I mean, because having fuel shortages, the overall cost of fuel, things of that nature is a big deal. But you really don't understand or see the perspective of it being a big deal till you have situations happen like we had in Texas a couple years ago, where like half the state had power, especially in the larger cities, Dallas, Houston. Half the city didn't have power. It was a pretty big deal. And then, you really don't realize how important a reliable energy source is until like, I mean, your life quite literally is dependent on it. So it'll be nice to see our energy grid technology get upgraded, and become more efficient, because that stuff hasn't been touched in I don't know how long.
So I have to ask, considering the announcement of a $600 billion Saudi investment, and we're talking about energy, and the top three energy companies is Saudi Aramco, ExxonMobil, and Chevron Corporation. So, do you think that $600 billion investment could have anything to do with energy?
I mean, it would definitely have to. It would definitely have to, especially when you consider Trump's position on tariffs, um, and becoming not just nationally becoming dependent, but also being able to meet demand overseas. Because LNG, which stands for liquid natural gas, the demand overseas has gone crazy since the pandemic. So, you have countries like Germany that need an energy supplier, and several other countries that we're actually allies with. They need a reliable energy supplier as well. So, I don't see why it wouldn't be to help bolster energy on top of, there's some favors in there. It's always some political favors in there. I wouldn't be shocked at that.
Yeah, I mean, anytime I get to hear anything involving the Saudis, I automatically think oil. And for him to be all of these things to be happening, and then we have a $600 billion investment that they were vague about, and there's no really details about it. And they are one of the big. They have the biggest energy company in the world. Yeah, I mean, it got it. Cause 600 billion. Where else would y'all be putting it? It ain't tech.
Ah, no.
So where else? Where else could it be going?
Nah, it got to be going to energy. It got, but this is the thing, and this is we. I don't have a crystal ball. I don't have a crystal ball. I'm just simply saying this energy play that I see formulating. I mean, we started talking about this damn near first episode.
Yeah.
So I mean, it's obvious to me that the energy sector is definitely one we're gonna have to pay attention to. Um, I definitely foresee cities like Texas becoming a bigger hub for not just energy, but Texas or tech as well.
Oh,
You
yeah.
already got the Tesla factory out there. You know what I'm saying?
Target,
Texas is the oil
Target,
capital.
Target facilities out there.
Right. So I mean, you got a lot of growth I foresee coming to not just Texas, but some of the Midwest as well. Believe it or not, there's a lot of people from California that have migrated over here over the years. I meet a lot of people from that side of the states. So I wouldn't be shocked to see the Midwest and of course Texas really see some growth and attract some business.
Yeah, I mean, so from an investment standpoint, I guess we need to be looking at, well, can I don't know, for ExxonMobil and Chevron.
Yeah.
ExxonMobil, Chevron, be looking at those two, seeing what's going on with that, keeping our eyes out for any partnerships or any movement around there. But if he's trying to go big into energy, then they would be the biggest beneficiaries of it.
Yeah, I mean, like you said, we'll just have to pay attention to who are the bigger beneficiaries. I mean, you're not gonna you might there might be several, but you ain't gonna be able to invest in them all unless you look at like an ETF of some sort. So, I mean, those are always options, but I definitely foresee energy like really taking off in these next 4 years, like really seeing an abundance of growth.
Yeah, I mean
But
that's probably a sector I'm gonna have to look into. I'm not. I don't really have no energy in my portfolio right now, so that might be something that I could look into adding with Trump
on
doing what he.
me,
So
always options, always options. But moving on, man, we got other executive orders, but not related to energy. Trump definitely released some stuff related to the crypto space. You know, I was extremely happy about this personally, you know. But not too happy because we didn't been got before. Gary Gensler. I'm never gonna let that go.
holy
So
smoke for Gary.
hey, I got PTSD, man. So, you know, I take everything with a grain of salt. And unfortunately, in this particular space, I've become I'll believe it when I see it, related to regulations and things of that nature. But, you know, we do have a rundown real quick of the executive orders related to crypto. This is Eleanor Terrett. She's a reporter for Fox Business. She definitely covers a lot of the crypto space. So she's definitely a good resource to have. But she posted over on X a couple days ago related to the executive orders for crypto. You know, basically they're establishing a working group for the president related to digital asset markets. They're really trying to strengthen, you know, U.S. leadership in the digital finance space because you have places like Singapore and Dubai being real friendly with digital asset companies and just digital assets as a whole from a tax perspective. So they've seen extreme growth over the last almost 8 years related to digital assets. A lot of people building there. So, you know, Trump is trying to attract people to come and build in the United States for digital assets as well. So that's interesting. Um, he's also saying that you know they'll get into obviously like stable coins, strategic national reserve. Just looking at how viable that might be, but I did notice they didn't say anything about specifically Bitcoin national reserve, but more so of a stockpile of assets.
Yeah.
And I would be cool with that. I would actually like that more than just Bitcoin only. That's just me personally. And the reason being is because there's so many other assets but Bitcoin that are viable, in my opinion.
Man, you might get ate up on X by the
I,
Bitcoin
hey,
maximums. They going
hey,
crazy.
let it be, man. Like, and I don't get maximalism. You know, I'm not trying not to go off on a tangent, but there's so many assets out there that are viable. It's not just Bitcoin. Definitely not just Bitcoin. Even though crypto's been around for more than a decade now, it's still very new compared to the other asset classes. So there's so much to still figure out related to building out this technology because it truly touches just about everything. It's not just from a financial standpoint. Um, so, in my opinion, not every crypto should be in the strategic reserve, of course, because it's a lot of trash out there. It's a lot of trash. It's over a million coins. Over a million coins, and not all of them have utility. So, in my opinion, it's just the best of the best that should be in that reserve, and maybe we just focus on American-made cryptos in that reserve. Who
So that
knows?
what would it mean? More than likely, it'll probably just be what top off.
Yeah, I mean, you got XRP, you got Hedera Hashgraph is American made, Sui is American made. I can't really say Bitcoin because you don't know who made Bitcoin. So
Ah, see.
um, uh,
Hey, nah.
I'm just saying
Oh, wait a minute, wait a minute, wait a
that's the
minute.
facts.
How are you shading Bitcoin, bro? Like this started out as Bitcoin Strategic Reserve.
Hey,
You
I'm not even shaming Bitcoin
you
because
got
I
this.
definitely believe Bitcoin deserves to be in that stockpile. I'm just simply saying I can't say that Bitcoin is American made because I don't know who made Bitcoin. That's all I'm saying. That's all I'm saying. That's all I'm saying. No shade to the Bitcoin community. I mean, because then I'd be flooding my own bags. I got Bitcoin. I own Bitcoin. But anyway,
Yeah.
tried to get me. You tried to get me. You tried to get me. But anyway, and then they were talking about how David Sachs, which is the presidential, well, he's been appointed as the crypto and artificial intelligence czar for Donald Trump. So he'll definitely be making recommendations once they go through their evaluations and stuff like that. Um, I think this is good because the last administration, they wasn't on this. They wasn't on this. There's plenty in here. They definitely. Oh yeah, that's one thing that's important. They banned the development of a central bank digital currency, and I thought that was amazing. Yeah. If you don't know what a CBDC is, which stands for central bank digital currency, it is a centrally issued currency backed, or yeah, I guess you could say backed 1-to-1 by the US dollar. So it would spin like a stable coin, but it's centrally controlled by like a single bank or something like that. So that bank and the way that they were about to develop these CBDCs, they would allow you, or not allow you, but they would be allowed to rescind that money if you don't spend it within a certain amount of time. They would be able to enact certain rules, certain, regulations around that Bitcoin, or not that Bitcoin, I'm sorry, around that CBDC that basically intruded on your privacy, gave them way too much control over your money versus it being in the spirit of decentralization, which is what crypto is in general. So yeah, I'm cool on CBDCs all the way. Um, What else did they talk about? Uh, really just being a hub. They really just want it to be a hub for digital asset innovation and investing. So, again, going back to trying to attract people here. I don't know if it's true or not, but they're talking about zero capital gains tax on cryptos if you build here in America. And if that's the case, y'all might never see me again. Y'all might not ever see me again. Because that would be huge. But I do see some issues with that. Why give one asset class extremely favorable tax laws versus the other? I mean, that's so lopsided in my opinion.
I mean,
Um,
I'm with that. I'm with that. America first.
okay, I get
What
that, but
what better
then, but
what better way to bring, kind of like with the H-1B visa situation, what better way to bring all the talent here than favorable tax conditions?
yeah, but that's like so lopsided. I mean, think about the tax you would have to pay on stocks, your stock profits. Like people wouldn't feel good about that. Like, wait a minute. Then you're quite literally damaging an entire market because the tax laws are just ridiculously favorable in another asset. People would leave gold, people would leave, bro,
And
those markets would cease to exist.
you would have to do. I ain't see anything, but you would have to. Yeah, it would be. Yeah, matter of fact, yeah, bro. Nah.
Yeah, right, right, right. Like, and I like crypto.
Man,
Like, I'm a crypto dude,
all
but
American companies, it would be.
exactly. Exactly. I mean, imagine having to pay 15% on your Nvidia stock, but you paying zero on gains related to every crypto you can think of that's made in America.
Okay, so he just make a lower tax rate for all American assets, but even then, you will still have issues with that. There might still be some pushback
Right.
from.
Like I don't know how you could do that. I wouldn't mind favorable tax laws related to crypto. I'm definitely not saying I don't want those. I'm
Just
just
get rid
saying
of
it can't
capital
be
gains tax.
so. You said what?
Just get rid of capital gains tax altogether.
I would be cool with that. I would be cool with that because why do you feel like you deserve a piece of this?
I mean, what other way to incentivize and stimulate investors to get that to invest in their favorite companies and boost equity. When you got a booming stock market, when you got booming crypto, you know that the economy is going to get some residual of that.
Oh yeah, of course. People gonna be spending more. So yeah, you would definitely move money a lot faster. People be I definitely would see people being in a better financial position if there was no capital gains tax. But I mean, he's also already talking about, and this is on a totally different topic, but he's also already talking about, removing the income tax, federal income tax.
I think that's far fetched. I don't think the establishment is gonna let that happen. I
I
can't
mean,
see
which one would you rather have? Income tax or no capital gains tax?
income because then I got more money to invest, and then I can just. I mean, I can find it's more loopholes to the whole investing thing than it is. Them hitting your income, bro. You feeling that every 2 weeks or
Yeah,
however often you get paid. I'd rather have no income tax, for sure. For sure. And if you think about it purely from an economy standpoint, everybody doesn't invest. So which one would be better for the economy? Probably no income tax.
I could agree with that. I could definitely agree with that. Bro, no income tax?
The checks. Like,
That's
no.
crazy. That's crazy. But I do see how, I mean, honestly, no capital gains tax. Bro, I would just, why don't people take more? This is getting off totally off tangent, but why don't people take like borrow against their holdings more often then,
Well, you got
instead
bro,
of,
that I haven't really heard of many people doing that in stocks.
oh, why don't they? Like if you ain't trying to get played out of your position, right? You're not trying to sell your stock or whatever, and but you need access to liquidity. Why wouldn't you do that? Why would you sell, incur the capital gains tax?
In stocks, more kind of that play will go along with having a solid dividend portfolio that brings you passive income while still holding the asset.
I
Because
can
that's
see
the
that.
whole point of like a SEHD or having a really, really strong dividend portfolio that's
Right.
bringing passive income that you can use to invest in other assets or to use the drip method to reinvest back into that dividend to compound that growth. I think that kind of play, like what you would do, like with through like DeFi and all of that kind of stuff and staking and yield pool and all that kind of stuff. People in stocks pretty kind of do that with. I mean, you could say bonds or dividend investing and all that kind of stuff. I have me personally, I haven't heard of nobody borrowing against their stocks.
Bro, I just always hear about, you hear those stories about the people who got rich off Coca-Cola and who are still rich but still hold their initial shares. And it's because they've essentially built, I forget, it's a type of loan. Let me see if I can chat GPT it real quick.
So you can borrow against your stocks. It says it's
Mm.
usually done through a process called securities based lending or margin lending.
There you go. There you
Margin
go.
loans, what it is, when you open a margin account with a brokerage, you can borrow money to buy. Oh no. Hey,
Bro, I would never do that on margin. I would never do that on
we
margin. What's the
ain't
other one
buying
though?
no
There's
stock.
two.
We ain't buying no stock no more. No. Immediately no. I didn't even get that. Immediately no. Now, and I'm not even gonna finish reading that. We're
Yeah,
not.
read the other one, not the one on margin.
I can't lie, bro. I know people that have taken out loans to buy stocks. The stock went crazy. They paid off the loan and made it back.
Right.
That's not
Right.
investment advice, though. That's extremely
That's
dangerous.
extreme risk.
Nah,
That
I'm with
is funny. He,
you.
he got the margin and cut it off.
Okay, the
Cut it off.
securities backed loans, securities based lending. What it is, this is a type of loan that allows you to borrow against your existing stock holdings, but instead of using the funds to buy more stock, like margin loans, you borrow money for other purposes. Example: personal expenses, business investments, or home renovations. How it works: your stocks serve as collateral, and you can usually borrow a percentage of their market value. The loan doesn't require selling the assets, so your stock positions remain intact. Typically, you can borrow anywhere from 50 to 90% of the value of your stock holdings, depending on the lender and the quality of the collateral. Interest rates can vary depending on the lender, but they tend to be lower than traditionally personal loans. Mm.
See, you see what I'm talking about?
So if you
That
got a decent account, it may be
right,
better, especially if you
right.
don't.
So why would you? Because you don't pay tax on loans. You don't pay tax on loans. So why would you sell, incur the capital gains tax, and only come away with a portion of the bread?
This is one thing though. Especially like for me, I personally wouldn't do this reading this with a tech stock or something like that because one thing to consider is market volatility. Borrowing against stocks that are volatile, if that drops in value, your holdings could trigger a margin call and force you to sell your investments at a loss.
Yes, but I mean that's the risk on crypto as well. That the same
Yeah, but
thing could happen. It's
yeah,
called liquidation.
yeah, but me personally, I don't want to risk liquidating my position.
But
I
why? Oh, but
I'd rather
you're not going crazy though. That's not what I'm saying. That I would see you being concerned if you're borrowing more than 50%. If you are borrowing up to 90% of your portfolio value, you are crashing out. You are crashing out, in my opinion. But
okay,
think
but
about it though.
where can you go to do these securities back loans? Like, who do you go to for that? Let me
I
see.
don't know. I don't even know if you could do that through an E Trade or nothing like that. I think there's like a I don't know, some type of brokerage house or something that you would have to go through to actually get that on paperwork. I would be
Okay.
shocked if you could do that through an app.
To obtain a securities-backed loan, you can approach several types of financial institutions and brokers that offer this service. Traditional banks like Wells Fargo, Bank of America, Citibank, brokerage firms, specialized lenders, private lenders, wealth management firms, online lenders, and fintech companies. So it's looking like, traditional banking system.
So you could literally go to the bank down the street.
So
But
this,
but I wonder if you have to like transfer, like how do you put
yeah,
the
that's
stocks in their hands? You know what I'm
honestly
saying?
it get tricky, bro. See, I can't. It's too much.
I mean, okay, hold on. It's not too much,
You take it,
especially if it, hold on, if it's an option for people, if it's a legitimate option, it's not too much.
but peep it.
It's never too much.
They take control of your assets, and as we know, with traditional banking, when they take your money, what do they do with it?
Yeah, they go and flip it too.
My thing is this: if you take my securities and you're holding them until I pay you the loan back, and are my securities back like a normal cash, normal fiat cash? And what if my securities total more than 250,000?
So I think, well, yeah, because then you're not FDIC insured.
What I'm
So
saying.
there's that. But so the way in which it works in crypto, of course, I own the assets. Of course, I still have control of them. But while I'm borrowing against it, I'm also lending it out at the same time. So the assets that I have as put up as collateral is still earning a yield, even though I'm borrowing against it. Right. So
Yeah,
then, therefore, I would think, because you take the same scenario and put it in traditional banking. You have the middleman, which is the bank, in which you're allowing to hold your stocks at this point, right? I would be shocked if they were not using the value, or at least the own just having that asset. I'd be shocked if they weren't making some yield off of it.
but my thing is this: like, say let's rewind back 2023. Say you take out a securities back loan and the bank holding 1,000 shares of Nvidia, 1,000 shares of Palantir, and 1,000 shares of Tesla. As we know, last year them stocks went absolutely nuts.
Hmm.
Who does all that growth go to?
It should still be in your hands because it's your collateral group.
Okay, so at that point, am I allowed to just pay them off with some of that growth, or do I have
Yes, that's
to?
how I do it in crypto. I borrow or I leverage my assets at the lowest, at the bottom, essentially. Right. So say I think we had a market bottom. I take out a loan instead of selling my assets. Right. And so I go on, do my thing with the loan. Right. I'm paying my loan off. through whatever means. But as my collateral grows in value, I'm utilizing that new profit to also pay off my collateral loan.
Okay.
So in crypto, you essentially just paying yourself back, but the interest rate is so low in traditional banking by that way, probably is because they're also able to make more off that asset because it's not cash.
I just don't like the liquidation aspect because like that's out of my hands. I
Yeah.
can't control that.
I mean, it
And if
is
I
out of your
take
hands,
a loan and
but
and
most
my position gets liquidated, what does that mean? I lost my investment and I'm still on the hook for all this money?
well, no, at that point you've already paid the loan off because they took your collateral.
But what if the collateral is not worth enough to cover the loan?
But you would already hit liquidation before then. That's the whole point of them taking the collateral because hey, all right, fam, that's enough to pay off what you borrowed. That we probably ain't making no interest or nothing on it, but we at least got our original investment back.
It's something to think about. It's something to think about because I,
Bro, it is because I used to
I
be
didn't know you could do this. I learned something new
no,
tonight.
but see, that's the thing. Like I've been knowing that you could do it. I just don't know the behind the scenes. I don't know how the whole transaction between transferring your stock holdings to another finance. I don't know how that works.
I've
I
never
just know
heard this
in crypto, I
doing it.
take my asset, I stake it on the platform, I hit borrow, I hit the percentage, I got my loan. I'm done.
Yeah, I've never heard of anybody doing it with crypto before. That's why like when we talk, I didn't know it was a thing. But
Yeah.
I don't know. I feel like I'd be kind of queasy about it. I ain't gonna
I
lie.
mean, yeah, you would, of course, just like with anything, you'd have to get comfortable and understand the risks and the ins and outs of how it
I might
works.
go small, but I might go small for
Right.
I might get
Like,
see myself doing this for a little car loan, 40, 50,000.
right. That's what I'm saying. Like, I wouldn't, at least for me, I don't foresee me doing it for major purposes. But if I wanted to say I had like, a $300,000 portfolio or something, and I wanted to borrow 50K, 60K, I could do that. I could do that and use my holdings for it. Now I didn't removed a high interest rate payment, especially if you're talking about a car, right? And then I just replaced it with a much lower interest rate payment, and it's essentially paying myself back.
So
I'm good.
if you're doing this, say in this instance, you're getting a 50,000, you're taking out you're buying a $50,000 car. Do you, because of volatility, do you give them 100K worth of collateral just to cover any deficit, or do you just give them $50,000 worth of collateral?
Hell no, hell no. So that's not the way it works. So
Work.
hey, crypto, nah, in crypto, say I want to borrow 50,000 just to
Uh-huh.
stick with the example. I would put up 150,000.
Oh, so it's not 1 to 1.
No, hell no, I would never leave it at 1 on 1. You want to give yourself cushion,
That's what I'm
but
saying.
that's the
Yeah.
thing. Crypto is over collateralization,
See,
right?
Chris,
So like,
you a brave dude, bro. You playing
not
these
really.
crypto?
Nah, not really, bro. Not really. It's mad basic, and it's all about your risk management. It's all about whether you did it in crypto or you do it in stocks. It's all about risk management. That's all it is. I don't take out large portions of my holdings and loans. First of all, like I said, I wait for the bottom of the market. And mind you, this depends on asset, So like certain assets we know still ain't took off yet, right? Still ain't really seen its bull run like that. So at these levels on certain assets, I feel comfortable doing this because I know there's more upside than downside right now, right? So
Yeah,
say if we were at the top like we are, like I feel like we are with Bitcoin right now, I would not be doing that.
yeah, that's crazy.
If my sentiment is I think Bitcoin is going to eventually retrace down to 70K, I'm not doing a loan right now at 100 something. What I would do is I would wait till we hit that 70K mark, and then that's when that becomes a potential option. But yeah, bro.
Securities back loans. It's a thing.
Hey, you learn something new every day. And that's another thing. I knew because you could do that in crypto, there's no way you couldn't do it in traditional finance.
Yeah, but
There
it's
was
just
no
not.
way.
Look, I don't know if it's frowned upon because people don't want to. I mean, I've never heard of anybody doing it. I've never heard, even Wall Street Chopper. He just bought that $1 million building.
Right.
Even he sold. I think he sold some stocks to buy it. He just got the money back in the options market. But I don't think he did like securities. But I've never heard of anybody doing that. Me personally, and I'm sure somebody's did. I haven't heard of it personally. I might have to
Right.
go and see. Hey, did anybody know anybody who's done this? Because now I want to know like what was the
Why are
what
we
was
not
my
talking about
process?
this? Yeah. Yeah. Because I mean, think about it, bro. Think about it. You got Nvidia stock, right? And
Uh-huh.
say and hypothetically 120 is the low. And in 2026, you at 250, right?
Yeah.
Imagine imagine you had like maybe 200,000 or so in Nvidia, right? You took out a loan against that 200,000. You only borrowed 50, 60,000, right? So not only did you get to utilize $60,000 of that $200,000 without selling, but you also got to partake in the price appreciation. So now, just because you had $200,000, I don't know how many shares of Nvidia that would be right now, but that 200,000 is no longer 200,000. That 200,000 is like whatever it would be at Nvidia's price being 250 a pop versus 116 or 120, I mean. So you basically got free money.
I'd be nervous every single day until I pay that loan off. Not gonna
Bro,
lie,
it's all about risk management. That's all. That's
because
all.
a traditional loan, like like I could like I would never do this, but traditional loan, fumble that, file bankruptcy. This you fumble your whole portfolio, especially some people. Wow, they mess around and get up to 90% of their portfolio or something
Yeah,
crazy.
that's crazy. That's
If,
super
if
crazy.
I'm talking about it, if it's an option, it's been done.
Yeah. But okay, so there's two options. There's a margin one, and we can
That
rotate off
market
this.
is crazy. Don't even
That
mention that.
that margin one, I nah, bro. Nah. But but that's just to buy stocks though. That's to buy more assets,
That's
right?
still
So,
crazy because
but even still, right?
news.
But the security backed loan, that's to get something that doesn't, I mean, I don't know. Maybe you could get something that still produces some type of yield, so you have some means of paying it off passively. But that would be the goal. I mean, because that's what we do in crypto. Like, there's means of passively paying your loan off without, having to go out your way to pay the loan off. So you essentially don't even incur a bill.
Yeah, I just asked, posed the question on X. Has anybody done this? Does anybody know anything about this? Now I'm interested to see the responses because I've never heard of anybody doing this, and now it's got my mind going because I'm already looking to build another house in another 5 to 6 years, and I'm
So
trying
wait
to
a minute, wait a minute, wait a minute. This whole time when I would bring up the fact that the portfolio is going to be looking crazy by that time,
we never considered this.
you never like it never clicked to you that this is what I was talking about. Oh, yeah,
What I'm trying to say is me using my portfolio. See, I've never really thought about using my portfolio on in stocks as a leverage because I already knew it was a thing on the crypto side
right.
because you introduced me to that way long time ago. But as far as stocks, the mentors, people that I followed, I've never heard of anybody doing it with
Bro,
stocks.
and I don't know the ins and outs. So I'm not trying to proclaim myself to be an expert on it. I just understand the concept.
Yeah,
And I would be, like I said, I would be shocked if we could do that in crypto, but y'all can't do that in traditional finance
well,
because traditional finance came before crypto. So we had to get the idea from somewhere.
maybe I'll do it with SoFi.
Hey, I mean, all I'm saying is there's options
Yeah,
and you need to know your options because you may not have to play yourself out of position to take advantage of opportunities elsewhere. That's all I'm saying. That's all I'm saying. But moving on, we went off on a whole tangent. That wasn't even part of the
Hey,
script,
but
bro.
it's good though because if for somebody who you don't know, people got different size portfolios, or they may be growing their portfolio with hopes of buying a home, buying land, doing this, doing that. It's good to know these things. It's good to know these things because it gets your mind going. You spend all this time
Boy,
building up a portfolio, you may as well be able to use it and leverage it to buy other assets without losing the principal.
absolutely, absolutely. So that was definitely unscripted. That is not on my book of
Not at
topics
all. We
here.
ain't talking about that at all. That was
So,
very organic.
hey, so I'm definitely glad that happened because, like you said, not everybody understands the different ways in which you can leverage your net. Because that's where you start talking about net worth
Yeah.
and not how much you make a year. You know what I'm saying? So different conversations right there. But anyway, man, getting back on track, man. We Deep Seek is in the news. Deep Seek is in the news, and I could have sworn, man, I could have sworn a certain podcast has been talking about Deep Seek for a couple of months now. But what do I know? What do I know, man? What do I
I
know?
we talk about receipts a lot, and so I have to. I got to look and see, man. Because last time I checked, I think I did it on the Instagram. I talked about DeepSeek 3, and I talked about DeepSeek 3 back in December. Back in December, I talked about DeepSeek 3. They launched their version 3 large language model. Apparently, they built it for under $6 million. It was supposed to be beating OpenAI's ChatGPT in certain metrics. And back then, when the news officially came out, I think the first time I heard it was on Bloomberg Tech or something like that. Crickets. Nobody said nothing. The market didn't react. Nobody was in an uproar. DeepSeek 3. This is not this isn't new. Version 3 was launched in December of last year. And we already knew that it was open source. We already knew they did it for substantially less than we've been able to develop our large language models for. And but some new details that did come out is apparently we already knew they used NVIDIA's chips, but we thought they used NVIDIA's low end chips. Well, apparently that's not the case. Apparently they had up to I think 50,000 H100s is what's been circulating around. So that would mean that they've been circumventing the system and still getting NVIDIA's high end chips to build these models, which leads me to believe that DeepSeek 3 is capped.
Oh,
Because
but not only that, but like, if how is it built off of OpenAI's models if OpenAI is not open source? I'm confused.
I don't know what's going on with that. Now I'm starting to see things that talking about Elon Musk may be behind some of this with DeepSeek and going ahead and OpenAI. I asked him on X. I added him. And I added Sam Altman. Yeah, what's going on? But my thing is this: I don't really believe that they made it. For the amount that they said, they already said they did it with certain type of GPUs, and then we find out. I can't remember who it was, but it was a young CEO of a tech company. He spoke about them allegedly, having 50,000 H100s that they can't talk about. So it leads me to believe that you know, you're already being dishonest about certain details. And then we had it earlier, was it earlier this morning,
Mm.
where, you were having issues with people being able to access the LLM and be able to use it. And they weren't accepting registrations. And they were saying that there was a malicious attack, you know, and apparently, I guess it was crashing. But I don't understand what the uproar is. I don't understand what the uproar is. I've heard the angle of, yes, this could lead the market sentiment being to believing that maybe there's not going to be as much money going into our tech companies for this if China was able to do it at such a low cost.
Right.
But
I mean, I definitely thought about that because I was of that sentiment at first. I was thinking, like, wait a minute, if they legitimately built a rival to Chat GBT with only $6 million, and we're
oh,
pumping billions of dollars into these American AI companies, bro, how overvalued is the AI industry in America? Like, if that was really true,
but that's the I don't think it's true because you're not being forthcoming about these alleged 50,000 H100s. And if you bought 50,000 H100s, I'm pretty sure you spent more than 6 million developing this large language model. I'm not really buying it. And even if that was the case, I still don't understand the big sell off with our semiconductor chip companies, especially Nvidia. They couldn't have done it without Nvidia chips. Nvidia has not, really lost market share. They're still needed in the data center business. They're still needed for their GPUs. I mean, we still have Blackwell, we still have Rubin coming up. There's still amazing guidance. I don't really understand it. Me personally, and everybody that I know that I've been talking to, we're buying. We're buying at these levels.
right?
It's a blessing. So I don't. I think people. I think the market is too fickle, man. I think. I mean, I said before, even on X, I think traders are selling this type of news. Long term investors, we're buying. I don't see why you will be selling this news. This is not. It's not going to cripple Nvidia or the semiconductor chip stocks. But if you believe it is, hedge yourself with AMD.
Right. But I mean, not just that, but like, I mean, the market is it always naturally takes dips. The markets never just go up in a straight line. But I put up this tweet coming from David Sachs, which is the crypto and AI SAR in the White House. And he basically says DeepSeek 3 or DeepSeek R1, excuse me, shows the AI race will be very competitive and that President Trump was right to rescind the Biden executive order which hamstrung American AI companies without asking whether China would do the same. Obviously not. I'm confident in the US, but we can't be complacent. I definitely agree with the complacency part. Like, y'all not the only ones now.
Well, I don't think that we've been complacent though, because you've had, the CHIPS Act, and now you have Project Stargate, and you've had the restrictions on the chips to China. I don't really think that we've been, you know, lax or lenient when it comes to this race with China. I think we are taking them serious, but at the same time, in order for these companies to generate the type of profits and yield the returns that they've been yielding, China's market is a big part of that, which means
Right.
they're going to see benefit naturally from the technological advancement. And they're they try to do the same thing we try to do. I said before, we may be able to slow them down, but we're not going to stop them. And this is
Yeah.
just an example of that.
And then I think we also have to get more, and maybe we never get these details, but we eventually have to understand what type of technology they're using to even produce their LLM because like, I mean, it was never made official because I didn't ever hear it on the news today, but there was some rumblings going on that, when you would ask DeepSeek 3 what their how it was built or what it is, it would say it's Chat GPT.
And
So
that's what I heard on the initial reportings from the lady who initially reported it, who was one of the first to use it. And that's what she said.
right. So if that's true, then how they get access to those models if they're
Well,
not open source?
well, what,
That's my
what
main question.
I think what she said is that DeepSeek was trained on ChatGPT's outputs.
Okay, well that's night and day difference then.
Yeah, it was trained
That
on
night and day difference.
yeah, it was trained on ChatGPT's outputs.
Okay, okay, that's not the same thing as training it on the same model. That's
No.
different. That's
So it
totally different.
was
That's
trained
totally
on,
different.
it was trained on the outputs.
Okay,
Um,
okay,
so of course.
okay, okay. But I mean, clearly, whether we feel like it was rational or not, I mean, the markets are always emotional. And I mean, even in crypto, like this had nothing to do with crypto. Why is the crypto market bleeding?
No, and
Like, like,
I
like
think
what?
well, I even said earlier on X, OpenAI, not OpenAI, DeepSeek 3, they're focusing on their models and all this kind of stuff. But America, we're focused on infrastructure. And
Right,
in this tech race, you're going to need both. You're going to need as we've seen with this introduction of DeepSeek, you are going to need potentially low cost models like this. Low cost, better margins, more profit, better scalability. But you're also going to need infrastructure, which is something that we are investing heavily in, which is something that we're focusing heavily on. When it comes to data centers and all of the things that we're building out over here in the United States. And I think that once we get this infrastructure built up, I'm hearing some people say that oh, we just got dealt a massive blow when it comes to this AI race. I don't believe that.
I don't believe that. That's
We were
like
already ahead. They need our technology to even do what they just did. Yes, did they punch back with DeepSeek 3? Yes. Especially if the reports we're hearing are true, which we don't know. And I think the entire space, the entire sector is trying to figure that out right now. That's
right.
all we're talking about on CNBC and X and a lot of other places. But I don't think I don't think it's what people are making it out to be. I think we're good. We're gonna bounce back. We're going to adjust. And I don't think, especially with the president we have right now, you got Elon Musk, who is very much involved in AI. He's very much involved in data centers, supercomputers. We have our companies working on quantum, all of this money being pumped into the space, in Biden's presidency and now in Trump's. We're not we're not taking things lightly. And I don't think there's anything to worry about. I'm not worried. Me
Yeah, and I
personally.
mean, I want to add to your point related to infrastructure because Hugo Fillion, Flare CEO, I was watching a video earlier today. It was like a clip. I didn't even get to watch the full video, so I don't know if he was necessarily referencing the traditional finance side of things or just like Nvidia or anything in particular. But he said that everybody is focused on AI agents, just AI agents, instead of the whole picture, like infrastructure and everything that will lead to better AI agent building. And that definitely is a place or a point that I see America putting their foothold in is the infrastructure side. Because without that, you really can't build all these,
So,
extravagant models and all that stuff. So the fact that, that same thought process is seemingly being looked through not just on traditional finance side, but on the crypto side of things, I think that's a good way to be looking at this.
once
Because
we
it's like picks and shovels. So like during, my dad would always talk to me about, in during the gold rush, the people that made the most money wasn't the people that was finding the gold. It was the people that was selling the picks and shovels. So if you can figure out, no matter what industry you're in, no matter what technological area you're in, if you could figure out how to be the person that sells the picks and shovels to the people that go and dig the gold, you'll never be without a job.
and check this out. If we're focusing on infrastructure and we have the best semiconductor chip companies in the world, do you not think, especially if China is dealing us big blows like this, especially if Trump is big on tech and we're having Project Stargate and all of these things, do you not think we could easily have a company like an Nvidia who is masterful at GPU computing power, AI training, and a company like AMD, who is elite at inferencing, come together and make these low cost large language models?
Oh, yeah, especially if it was a matter of national security,
They
for sure.
develop theirs with our outputs. If
Right.
you get all of these CEOs in a room, which I do think Trump has the cachet and the pull to do it. I think he could get Jensen Wong in a room. He could get Sam Altman in a room. He could get Lisa Su in a room, Elon Musk in a room, and get all these minds together. Like, hey, it's dire.
Right.
This what
Make
we
it
got.
happen.
Everybody gonna get there. Everybody gonna get theirs. We'll make sure everybody companies are doing good and they're making money, and we got these government contracts, and everybody's a part of Stargate, and everybody's eating. But we gotta come together for one common interest. If we don't want
Right.
to get swallowed up by China.
Nah, pause. But no, for real. But no, I get what you mean. I get what you
Wow.
mean, though.
Wow. That's so funny, man.
Yo, that was
Hey,
crazy. But
I
moving on.
think it was good.
Nah, but in all seriousness, like this I agree. I don't think that this deep seek thing is a big blow like everybody's trying to claim it or hype it up to be. But we did see some, some markets take the hit. So I mean, stocks definitely took a hit.
Mhm.
Uh, I'm still trying to figure out why crypto took a hit, if I'm being
Well,
honest with you,
I mean,
because
we kind of talked about it last week that crypto follows the Nasdaq.
yeah, it definitely follows the Nasdaq and the S&P. Um, but honestly, the Nasdaq took the bigger hit. S&P
Oh,
looked kind of
sure.
cool. So
Well, I mean,
this is
the semiconductor stocks they took that big hit.
the Nasdaq, right?
Yeah, which is
Yeah,
what
yeah.
a
Okay.
lot of companies are.
But this is Nvidia specifically. So looking at the individual stocks, Nvidia definitely took a hit. Look at this big gap right here. Before we started recording, we were talking about how this is a fair value gap, so it's naturally going to get filled. Just don't know when. But I mean, that's a major, major dip. So let me refresh this because I don't think it's showing me. Okay, yeah. So after hours, it's still at 118. Okay.
Oh, it's going
Um,
down.
yeah, I think it dipped back down to 118.
Oh, yeah, in the morning, break
Oh
short,
yeah.
break
Oh
short.
yeah. Don't
Not
have to.
financial
Don't have
advice.
to.
Not financial advice. I'm
Yeah,
loading up.
yeah, yeah, yeah. Not yeah. Don't pay attention to what we talking about.
I'm
But I
loading up.
mean, Nvidia or not Nvidia, AMD. I mean, they've been in a downtrend though for a cool
They
minute.
they have, but I think that a lot of people are focusing on Nvidia, and I think they're forgetting, you know, AMD's. I think they're forgetting about inferencing. I think they're forgetting about what
Yeah.
AMD does well. I think they count out Lisa Su for one. I think she working. She behind the scenes. She working. AMD is not. I think people are ill advised in doubting this stock. They're counting it out. People are selling, but I mean, you can't really. A lot of people are chasing gains, and now even we see what this. Now people are selling out of Nvidia, who is just the golden child.
Right.
People are
Yeah.
selling out of Apple. Saying that Apple may be done, and it's so. I mean, I don't really worry about that. I don't really worry about that. If you believe in a company, you've looked into their fundamentals. You believe in their product. You
Right.
believe in their mode, what they do well. You believe in the CEO. You believe in the guidance. You look at the numbers, the financials. All of this stuff it doesn't matter. If you're investing for the long term, which I am, 5 to 10 years, I don't care about any of the short term noise. When AMD's up, it don't matter if it's by the end of 2025, if it's 2026. When AMD's up, see y'all then.
Right. I mean, it's been in an uptrend though. So I mean, unless we get confirmation of a trend break, I mean, what are we looking at? I don't know if this is gonna happen. I'm just marking up what I'm seeing. So don't
AMD,
take this. Don't.
AMD, Nvidia are both $200 plus stocks, bro, in the next 2 years.
Oh yeah, of course. And pullbacks are natural. So I mean, this is not to scare, but I mean, would you be mad at either of these two levels?
No, but because this is what you have to realize, bro. People are worried about the short term. And think of it like this: a lot of y'all probably bought into Nvidia at some highs. A lot of y'all probably y'all wasn't in Nvidia before this last big run up. A lot of y'all wasn't. So take this opportunity to get in. Take this opportunity to get
Yeah.
out of positions, accumulate, block out the noise, focus on the fundamentals. You're always going to have short term news, geopolitics, this happens, that happens, that drops a stock or drops a crypto. Look at the long term. Look at the long
Right.
term. Zoom out. Zoom out and look at the chart. Zoom out. That's all you got to do. Zoom out and look at the bigger picture. Zoom out.
Yeah. Hold on. I'm marking that, but zooming
Put
out on this.
And show NVIDIA too when you zoom out. Show AMD zoomed out as well.
Yeah, this is all time high though. So Nvidia ain't never been there. This is new territory. But
For
what
us,
I was
it was just into gaming. Now they expanding.
Right, right. They everywhere now. So I mean, the growth is definitely there, but like I was just marking this up and I mean, I'm not shocked at where it currently is. I mean, you've technically already hit the golden ratio where that current candle is at.
Now, granted,
So,
will 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 Nvidia have another year like it just had? Maybe not. You know, you don't. The stocks are just not going to have 100+ annual
right,
return years. It's not likely. It's not realistic.
right.
But
But the last time it was 90 something dollars was in October or August of 2024. That wasn't that long ago, bro.
it don't take long for it to run up.
Eh,
That's why, just like it can go down quick on news, it can go up quick. They could come
right.
out in a 10Q or come out with some partnership or this or that, and next thing you know, it's running up, and you were worried about it
Absolutely.
being low instead of taking the opportunity. Once again, this is not investing advice. Do your research. That's all I'm gonna say. Do your research on the video. Do your research on a lot of these semiconductor chip stocks that are falling. You know, because we fast forward a couple of months ago, the everything everybody was in euphoria. Oh, these
Hmm.
stocks are gonna make me rich, and they're doing this and they're doing that. They're hitting all-time highs. Everything's great. Now, what the fear and greed index looking like? I ain't even pulled that up.
Bro, I put it up this morning for crypto. It was neutral. So I see
We
where
got
we at
gotta
today.
be in that. We gotta be in at least fear.
No, I mean, I don't know
It
about stocks, but
can't be neutral.
in crypto, we're neutral. Yeah, we're at 53. Earlier, we were at like 58 or something like that. So we definitely dipped more down into the neutral zone. But I mean, it's just natural market cycles. So I'm not too shocked or afraid of these dips. I mean, AMD's peak was 228, it looks like, where that fractal is. And we're currently at 115. So,
Yeah,
bro, this is a crazy discount.
yeah. We
This
in
this damn near half off.
we in fear. The score is 39. Score is 39.
Oh, okay, okay, okay.
We definitely in fear.
Oh yeah, bro. Like, I mean, if the high was almost $230 and we at 115 right now, that's a crazy discount. That's a
Yeah.
crazy discount, bro.
What they
But
say? Y'all better come get y'all one of these.
I mean, y'all
Y'all better
better come get
come
y'all
on.
one of these. Hey, not financial advice. We just pointing out some key companies, how to look at market sentiment because it's fickle. I mean, the emotions of the market, they change like the wind. Tomorrow, something could happen that's extremely bullish, price goes crazy, everybody's mood and change. So it's all about the overall market cycle, understanding how that fluctuates, how that ebb and flows, and make decisions from there. But that's stocks, but for crypto, we basically recovered. So, well, not necessarily, but it's not as bad. I won't say it's as bad as the stock drop was. Bitcoin, literally was at 105,000. We dipped all the way to 97,000 as the low, and we've recovered back up to about 100 and almost 102,000. So we've recovered most of that drop, I would say, but we still in the red for the most part. If you look across most cryptos, they've made the same move. So let's start. So this is what Bitcoin looks like.
The good levels though.
Yes, sir.
Whenever I see
Yes, sir.
XRP above $3, I know y'all still healthy.
Oh yeah, we good. We good. I ain't complaining at all. It's
Even
just market. Yeah, I mean, it's literally made XRP made the same move, Ethereum made the same move, XLM made the same move. Flare kind of made a similar
I know it's
move, not
crazy.
not so
You know it's
much.
crazy. Back in the day, back in like 2018, 19, 20, when Bitcoin used to drop, it used to hit the altcoins way harder.
Hmm.
Now they charts kind of follow the same little moves now.
Right, right. And
All
that's
the ones
why,
that got
honestly, go ahead.
well, at least on the top ones that got real utility.
Right, right, right. And that's why when I mainly analyze Bitcoin now. I don't even look at the other altcoins now. Like I don't like I mean I'll look at Flare's chart, I'll look at, XRP's chart, I'll look at HBAR's chart. But for the most part, when I'm looking at trading, I mainly look at Bitcoin's chart, figure out what move I think it's gonna make, and then I look at the other ones to see if it's making a similar move, and then I can enter similar positions.
Bitcoin
So
is
then I
like,
can eat off of
yeah.
yeah.
Bit, Bitcoin is like y'all S&P 500 index. Like Bitcoin almost represents the whole
Right.
crypto market when you're looking at like movement, volatility.
Right, right. I mean, we still have like total market two. Um well, this is total market, but total market two is
And they're
basically
the
the
same.
total it's same move. Same move. Same move. So like you could honestly even take it at a higher level and just trade off of the total crypto market, which is similar to a NASDAQ 100 or an S&P 500 because it takes into account all the major cryptos in the entire market. Yeah.
Index, yeah.
Yeah. So, but yeah, we took a similar move. I mean, on the total crypto market, before the move happened, we were at 3.55 trillion and we dipped to 3.25. So, and I believe I could have sworn I said that I could see us getting into this 3.22, 3.15 area a couple videos ago, but I ain't gonna toot my own horn because I got to go back and make sure I actually said that. But anyway,
Hey,
anyway,
right on
yeah, made a
that.
similar move. So, but I mean, that's really the landscape, man. That's really the landscape. You definitely want to pay attention to all these things when it comes to the market. Um, as you can see, even if something is not a major threat, the markets in general are pretty fickle. They change with the wind. Plus, you always notice key news comes out. If you understand charts, key news comes out right around key levels. So I always look for that correlation. And then of course the executive orders. I mean, Trump, he mean business, bro. And I mean, even though the markets have taken a hit based off of this deep sea thing, um, I'm looking forward to seeing how these executive orders related to crypto and energy, the energy sector. I'm looking forward to seeing how that affects the markets, how we see growth, and if we see innovation, and new venture capitals here for um, for energy, things of that nature. So it's a lot, man. It was a lot this week. But any closing remarks?
I mean, hey, when you're looking at down markets, bad sentiment, a lot of moving pieces, politics, geopolitics. You have mass deportations, tariffs. You have things like SAB 121. You got a lot of moving pieces in these markets, and when you're dealing with all of these moving pieces, the thing that's going to keep you grounded in your investments and cause you to not get shaken out and sell at a loss is doing your research. When you've done your research and you have high conviction, and you've done your due diligence and you've crossed your I's and you've crossed your T's and you know the asset that you're in and you believe in it, you're not going to get shaken out by an 8% drop, 10% drop, 15% drop. You're going to double down.
Right.
The only
Absolutely.
the only time you're going to get shaken out of something is if you're questionable about it. You don't really know much about the asset. You don't really know. I just talked to somebody earlier today. He was asking me about options and day trading and this and that. And I asked him, okay, well, what do you base your moves off of? And he just that he likes the stock. That's the type of thing that will get you shaken out because when things go, if you just invested in Nvidia because you heard it's a big name, they're doing this, they're doing that, or you just like Nvidia because you game and you like their chips. If you see a drop from 140 some dollars down to 180, you go, oh my god, you're getting out because you don't know the fundamentals of the company. You don't know their moat. You don't understand their financials. You don't understand. the companies and the different, things that the different people in the different, sectors that they serve. You don't know that they're into AI. You don't know that they're getting into quantum. You don't know that they're into autonomous vehicles. You don't know all the things that they're into. So, it's easy to get shaken out. So I just say do your research. Do your research. Understand the investments that you're in. Understand how they move. Understand the volatility of the investments that you're in. Because some of these investments, especially like if you're talking about a crypto or even some tech stocks, if Tesla drops $20 in a day, you should not be concerned. There's some
Right.
of these stocks you need to know how they move. Some of these stocks, they jump up and down like crazy. They're volatile. You got to know that.
Yeah. And just to add on to that, I mean, I would echo a lot of those sentiments, especially related to crypto. Some stock or not some stocks, but some cryptos you buy because they're the household name at this point, in particular the Bitcoin. That's not going anywhere. It's, a lot of talk, a lot of reserve, a lot of usage in terms of, you know, maintaining your value or your wealth over a given amount of time. And other, crypto assets, especially in the altcoin market, you got to really understand their use case. They have to have a viable use case. And when you've done your research and they've been able to meet and, show growth over time, they just not talking, you don't really get shaken out of those because you understand the core principles. You understand that they're actually out here doing some stuff. So, that helps in terms of crypto assets. So, these dips, they don't scare you. For me, they look like buying opportunities to me. I mean, I went shopping yesterday. I went shopping last night. I'm pretty sure if the stock market was open, I'm pretty sure you would have went shopping when some of this stuff was going on. So, but it looked like a lot of it's still at some lows. So tomorrow should be a good
Just
day to buy.
know your assets. Know your assets and how they behave, and you'll
Right,
know if it's time to get out. And like I talked about on X the other day, have an exit plan. Have an exit plan. When things go left, which is going to happen if you're investing. Things will go left. Every investment is not going to go how you plan. Have an exit plan.
right,
Same thing with
and
plans.
be open to learning new things because that can happen too. I mean, understanding your options, like we were talking about the security backed loan, like being able to do similar things in crypto, borrowing against your assets, being able to do that in traditional finance with a security backed loan. Like there are so many options, and you can formulate your strategy as long as you understand what your options are. So, like you said, man, like have an exit strategy or what does exiting look like to you, right? Because it may not be literal, but you may still be able to utilize that liquidity in other means without necessarily staying in position. So, and that just goes back to knowing your options. But man, with that being said, appreciate y'all for tuning in on another episode of Over the Counter Podcast. It's been good. We'll have this one up pretty soon, so be sure to check it out. See y'all in the next one, man. Give us a like, give us a share, subscribe. Let us know how you like the episode. What you think about this episode?
Yeah,
What do you think about any of this?
yeah. I mean, we still doing the game. It's only like episode 4.
Only episode 4, bro.
Episode 4. We're still navigating, this whole podcast thing. We're still getting our flow together. We still,
Right.
we know to this. We know to the podcasting space. We
Yeah.
know the podcasting space, but we're gonna continue to get better. We're gonna continue to stay consistent. As you know, y'all been seeing us every Monday, every what Friday.
Every Friday too. Yeah.
Consistent. We ain't going nowhere. Vegas is coming up.
That's
You know,
gonna be fun.
and we got some
Hey,
more.
and also too, man, people on X, man, because that's where all the fun has been happening, man. That's where all the fun is at. So, hey, check us out on X, man. We'll post our X links in the description of the video. Catch us on Instagram. We got plenty of content on that. But yeah, man, it's been good, and we'll catch you on the next one.
See y'all
Peace.
later.